Hi there, everyone. I am Lens Binispico-Yubit, one of the accounts executive at Perlamon. For today's video, we are going to discuss roles of valuation in business. Under this discussion, we are going to tackle five main topics, which are portfolio management, analysis of business transactions or deals, corporate finance, legal and tax purposes, and other purposes. But for now, we are going to focus on portfolio management. The relevance of valuation in portfolio management largely depends on the investment objectives of the investors or financial managers managing the investment portfolio. Passive investors tend to be disinterested in understanding valuation, but active investors may want to understand valuation in order to participate intelligently in the stock market. Under the portfolio management, these are the professionals that we might encounter or involved in the whole process. First one is fundamental analyst. These are persons who are interested in understanding and measuring the intrinsic value of a firm. Fundamentals refers to the characteristic of an entity related to its financial strengths, profitability, or risk appetite. For fundamental analysts, the true value of a firm can be estimated by looking at its financial characteristics, its growth prospects, cash flows, and risk profile. Any noted variance between the stock's market price versus its fundamental value indicates that it might be overvalued or undervalued. Next is activist inventors. Activist investors tend to look for companies with good growth prospects that have poor management. Activist investors usually do takeovers. They use their equity holdings to push old management out of the company and change the way the company is run. In the minds of activist investors, it is not about the current value of the company, but its potential value once it is run properly. Knowledge about valuation is critical for activist investors so they can reliably pinpoint which firms will create additional value if management is changed. To do this, activist investors should have a good understanding of the company's business model and how implementing changes in investment, dividend, and financing policies can affect its value. Next is chartist. Chartist relies on the concept that stock prices are significantly influenced by how investors think and act. Chartists rely on available trading KPIs such as price movements, trading volume, and short sales when making their investment decisions. They believe that these metrics imply investor psychology and will predict future movements in stock prices. Chartists assume that the stock price changes and follow predictable patterns since investors make decisions based on their emotions than by rational analysis. The valuation does not play a huge role in charting, but it is helpful when plotting support and resistance lines. Next is information traders. Information traders are traders that react based on the new information about firms that are revealed to the stock market. The underlying belief is that information traders are more adept in guessing or getting new information about firms, and they can predict how the market will react based on this. Hence, information traders correlate value and how information will affect this value. Valuation is important to information traders since they buy or sell shares based on their assessment on how new information will affect the stock price. Next is under the portfolio management. The following activities can be performed through the use of valuation techniques. We have two. The first one is stock selection, which answer the question, is particular asset fairly priced, overpriced, or underpriced in relation to its prevailing computed intrinsic value and prices of comparable assets? The second one is deducing market expectations, which answer the questions, which estimates of a firm's future performance are in line with the prevailing market price of its stocks? Are these assumptions about fundamentals that will justify the prevailing price? So to end the discussion, typically those investors do not have a lot of time to gather all available information in order to make investment decisions. Instead, they seek help of professional to come up with information that they can use to decide their investment. Thank you for listening. That would be all for now.